Alright, so today I ended up taking a short on NQ, and here is the breakdown. So basically on the daily chart, you see Monday's closure, right? We had this big move lower, sweeping more liquidity down here, and then closing up higher. Now, obviously looking at it now, you could say, okay, well maybe this is looking like a longer term, reversal or some sort, since you do have SMT created down here. However, coming into the day, I was still under the assumption that maybe we could see a run below sell side liquidity, obviously taking out the low from Monday too. Now, how CPI plays out tomorrow will be one thing, but coming into today, if we go down to an hourly chart, we were looking at this. So we had that Monday that, shot price up. We had this retracement. We clearly have been bearish. You can see on the 4 hour, right? We've been bearish. We've been breaking down. And now we're retracing back into that range. Now, if you look at this in conjunction with ES, you'll notice that we actually had some SMT at this 4 hour fair value gap, which also ended up being these, I believe it was, so it was PM highs right up here. So we end up having SMT with these PM highs, right? So we had Monday that sent price higher. Again, yesterday I was actually looking for an initial short to get us down into that sell side liquidity level. We clearly did not end up retracing. So this kind of set up even more perfectly for me coming into this morning. So what happened was, inside of, let me just hide the drawings here. So you can see what happened is we retraced all day yesterday, creating that SMT up here. But before that, we had Asia that was basically just in accumulation. London came in and we had this nice move higher, creating further manipulation. We ran out this high right here, created the SMT up here with ES here, and then we started to break down. So when I woke up this morning, I saw all this go down, and around 7 a.m. we had already shifted back to the downside. And then to add to the confluence of all this, we had this move occurring above midnight opening. We had it occurring above the weekly opening. So if you're thinking in terms of a weekly candle, right, we got back above, creating the wick of that weekly candle. And it is also a Tuesday, so we currently were putting in high of week on a Tuesday, all joining in with the confluence of this internal daily fair value gap. So we trade up into this, and then this red line here is actually a weekly inverted fair value gap here. So we were trading into all this. We had the hourly now with the SMT. It was also OT of the range. We retraced back into OT and we failed from this. So all these lining up, I now was looking at, a beautiful scenario to get short, aim for opposing side of the range, and potentially even go for the lows down here. Now, I'll get to that in a second, but let's talk about the entry. So the entry actually executed directly off of the hourly time frame. So you'll see here we had once this 7 a.m. candle closed, we had a fair value gap here. And then we also had this joined in with the breaker. You also had an inversion. So you had a few options here. It was also, at this point, it was just wondering like, all right, which entry is yours at this point? So I had a order out for the fair value gap. Now, one thing is we also had 8:30 news. So I was expecting, I wanted to get in ahead of 8:30 news because I thought we could then see 8:30 news deliver us lower, right? That was the idea. However, the one thing that ended up happening was at 8:30, if I go to a 15-minute candle, 15-minute time frame here, you'll see at 8:30, it blasted price up. So I got triggered in on that hourly fair value gap, right? We sent price way up. And at this point, I was like, oh shit, we're about to get stopped out. So there's a tad bit of luck involved in this trade, picking the indice that didn't run London high. But at the same time, I mean, I'll take it. And it also kind of reinforced my trade idea, because if we look at what happened on ES here, ES ended up running London high, forming a New York AME kind of manipulation here, reversing above here and coming back down. So after that, I was like, okay, we're looking even better now, because then another thing that happened was, if you go to the hourly chart, the 8 o'clock candle actually closed below that inversion fair value gap. So we came all the way up. Right here's 8:30, 8:45, 9, and then we actually ended up closing below that hourly inversion here. So with all that aligning, I actually told myself, all right, I got in with one contract at that hourly fair value gap. I was like, at that point, I was probably risking, I wasn't even risking a full R. Because again, I had my risk set just above here, and I got in right at 21.58. So it wasn't a full R risk unit. It was roughly about, a little more than half R. So I told myself, if we get closure below the hourly fair value gap, inverted fair value gap, I will actually look to add. So I ended up adding as we closed below it, and then a 9 a.m. candle traded back into this inversion. So I added another one here. And then you'll see from there, the rest of the morning was very tricky. It was just basically, it banged around, but I kept my stop. I kept my stop up here. And I was actually risking more than a full on R, because I really like the setup from top down. I mean, everything was aligning, so I was willing to give it more risk. And unfortunately, we had this wild price action, but I was pretty proud of how calm I stayed, and just kind of understanding, like, okay, this is what's going to happen. And if I think this is a high of day, we shouldn't come back up here and run these highs. And then obviously with the other indices, we were also respecting, those key PD arrays that I've been pointing out. So at this point, it was kind of just waiting for when price was going to deliver now. Similar thing happened, on Monday, yesterday, we had that New York AIM session that kind of banged around, and then we didn't really get expansion until lunch. So I was looking at this, by the time, 10:30 hit, and we were still just kind of in this range. I was like, all right, maybe we see that. Again, you see 10:30 came down, wicking below 8:30, trading back up into the range. So I was staying patient. I kept my stop here, and then we finally got some downside as 11 o'clock, got to the 11 o'clock hour. You'll see here we started to run below. Now, one thing I did do is right when we broke this 8:15 low here, you'll see this is actually right before the news shot us up. So that's kind of like your 8 a.m. low. When we broke that, I finally moved my stop down. And the reason for that is because you'll see here this 10:45 candle on ES never broke below it, whereas this one did. So we now were forming SMT here. And due to, the morning we were in, due to CPI pending tomorrow, I was willing to then take my risk off the table. We've finally shown a willingness to break down. So at this point, we should see lower prices. And if we don't, with that SMT, then that could mean we're not going to go higher. It could just be another seek and destroy kind of day. So at that point, once we ran this low here at 10:45, I moved my stop to break even, and it was basically a risk-free trade at that point. Now on this candle, I had TP. I had one set at a 2-to-1 was my first objective, and then at that point, I was just going to let it run. And let me pull up. So you'll see here I had 288.275. So my right here was roughly where my 2-to-1 was. My first exit was right here. And I like that because, like, all right, let me get that off the board, take some profits, pay myself for sitting in this, and let the other one ride. And I was willing to actually see, what we were going to do come, lunch, afternoon session. But then as I started to look at this more, and if you just look at this on an hourly time frame, we had this fair value gap here, and the other indices were not really showing that run, right? That wasn't really giving me much confidence. So you'll see ES, right? We tagged that hourly here. NQ, we tagged the hourly there. YM, however, was reaching back down, but you know, this looks crazy now, but it wasn't even reaching a discount, right? We were still within premium of the range, whereas all these other ones had reached discount, and we actually had reached for OTE of the range, downside range. So I decided to take my other partial off inside of this hourly fair value gap for a few reasons. One, similar to before, we have high impact CPI looming tomorrow at 8:30. So really anything's possible. The morning was choppy, not the greatest. We got that expansion, but after something like this, you really expect this to really run. It did really run, but we slowed down as we got into this area. We also had, you know, these order blocks down here. You have your breaker and your move higher. So we're trading now down into a point where price has a higher probability to potential one to reverse. And if at this point I wasn't super in love with how things were developing, and based on, you know, our economic calendar of this week, I was willing to just take off the rest of my position into this, and accept the fact that, okay, maybe we'll see continuation later on. That's okay. It's still Tuesday. CPI hasn't even hit this week. Let me just pay myself earlier in the week, and then kind of just, you know, go into the rest of the week with a clearer mindset, knowing that I got some profits secured. So just giving it this extra, I gave it an extra 40 handles. I mean, that's great. That's a nice way to chunk up the returns. But again, like I said, after looking at it kind of on a higher time frame perspective, you start to see like, okay, like maybe this was just a retracement. And you'll see now that I go back to our current time, you'll see that this actually is now looking like a super great play, because you'll see we actually returned into that hourly fair value gap, and now we're showing that explosion to the upside, right? Look at ES holding consequent encroachment perfectly, and now blasting back up to the upside. So at this point, and then look at this, also down into the order blocks, pushing back up. So obviously now look like a genius, but in the moment there was reason. It wasn't just because I was nervous for losing any gains, you know, that I already, unrealized gains that is. It was based on logic, and it was based on the idea that, you know, we have CPI tomorrow. Really, I mean, we could clearly trade back up and want to refill in the rest of this fair value gap. You know, you have no idea. Higher time frame wise though, we also obviously had, or still have, the weekly fair value gap up here. So maybe we're looking for a return to this weekly fair value gap, which has actually been inverted after last week's close below it. So maybe we see a return to this, and then we continue down to these sell side liquidities. Or, of course, maybe I'm completely wrong on my analysis that we could continue to see lower prices, and this is now a start of a, you know, move that goes back up to the highs. Who knows? But I think after CPI tomorrow, we'll have a better understanding of how the week will look to progress, and I'm happy to have taken out a little bit of, you know, a little bit of the pie today.